If Iran really gave the world only hours before a massive energy strike, then the most important part of this story is not the countdown. It is what the countdown reveals. Because by the time the world starts counting hours, the system is already under pressure. By the time traders panic, tankers reroute, and governments issue emergency statements, the real damage has already begun. It began long before the threat became visible. It began when the world built an economic order on narrow energy corridors, fragile assumptions, and the belief that strategic choke points could always be controlled at the last moment. They cannot. That is the truth behind this crisis. Most people think global shocks begin with a visible event, a missile, a strike, a blockade, a warning, a market spike, but those are not beginnings. They are exposure points. They are the moment when a weakness that has existed for years finally becomes impossible to ignore. And now the world is being forced to confront one of its oldest and most dangerous vulnerabilities. The Strait of Hormuz remains one of the most important energy arteries on Earth. A huge share of global oil still passes through a narrow corridor that can be threatened by conflict, coercion, or military escalation. At the same time, the global economy is carrying extraordinary levels of debt, dependency, and financial fragility. That means this is not just an oil story. It is an oil story colliding with a leveraged world. And leveraged systems do not respond to stress calmly. They amplify it. That is why this moment matters. Not because one country made one threat, not because one waterway may be disrupted, but because energy is not just another commodity inside the global economy. Energy is built into the price of almost everything. It is inside shipping. It is inside transportation. It is inside agriculture. It is inside industrial production. It is inside food. It is inside aviation. It is inside military supply chains. It is inside the movement of raw materials, finished goods, and entire national economies. So when energy becomes unstable, the problem does not stay in the energy market. It spreads. That is the part most people miss. They hear oil shock and imagine a commodity story. But real energy shocks are never just commodity stories. They are system stories. They are pricing stories. They are trust stories. They are political stories. Once a major energy corridor is threatened, everything downstream starts to shake. And that is why this should not be treated like a random crisis or just another headline from the Middle East. What we are seeing is part of a pattern, a very old pattern, a pattern that repeats across empires, currencies, shipping routes, and energy systems with brutal consistency. The names change, the maps change, the technologies change, but the mechanism does not change. First, a system discovers an advantage. It may be a canal, a reserve currency, cheap energy imports, a protected trade route, a narrow strait backed by military power. At this stage, the arrangement looks efficient, logical, profitable, even permanent. It helps growth. It rewards scale. It creates confidence. Then that advantage becomes dependency. Governments build policy around it. Markets build pricing around it. Corporations build supply chains around it. Populations build their expectations around it. And that is the hidden turning point. Because the very thing that once made the system stronger slowly becomes the thing it cannot function without. Then comes the trigger. A revolution, a blockade, a war, an embargo, a breakdown in deterrence, a military strike. Suddenly, the system discovers that what it believed was a stable foundation was actually a fragile assumption. And then comes the final stage, repricing, panic, improvisation, strategic restructuring. The old world does not return, a more expensive world replaces it. That is the real mechanism at work here. Not ideology, not optimism, not opinion. Mechanism. And once you see that mechanism clearly, history begins to look much less random. Take the Suez Crisis in 1956. The Suez Canal was not just a shipping route. It was a structural pillar of European power. Britain and France had built an entire strategic logic around rapid passage through that corridor. It made trade faster, empire cheaper, and energy access easier. That was the setup. Then came dependency. The canal became so central to European commercial and geopolitical life that it stopped feeling vulnerable. It started to feel permanent. That is always the dangerous phase. When a strategic advantage feels permanent, the system stops respecting its own exposure. Then came the trigger. Egypt nationalized the canal. Britain, France, and Israel responded militarily. Suddenly, the canal was blocked, shipping was disrupted, oil flows were threatened, and the illusion of secure control collapsed. Then came the outcome. The crisis did not simply interrupt trade. It exposed the decline of old imperial power. It showed that dependency on a corridor you do not fully control is not a strength. It is a weakness disguised as efficiency. Europe learned the lesson the hard way. When your system depends on a narrow route, the route can begin to control you. The pattern held. Then came the 1970s. The post-war American-led order looked stable beyond question. The dollar anchored the system. Global trade expanded. Industry grew. Confidence surged. That was the setup. Then came expansion and overreach. The United States stretched itself financially, militarily, and monetarily, Pressure built quietly beneath the surface. Foreign claims rose. Monetary strain deepened. The system still looked strong, but its internal balance was weakening. Then came the trigger. First, the monetary order cracked. Then the deeper shock arrived through energy. The oil embargo did not simply raise prices. It exposed something much more dangerous. Industrial powers had mistaken access for control. They believed participation in the system meant mastery over the system. It did not. Then came the outcome. Inflation surged, growth slowed, public confidence weakened. Fuel lines formed, emergency measures appeared. Institutions improvised. The previous era did not recover in its old form. A harsher, more defensive energy order emerged in its place. Again, the pattern held. Then came the Iranian shock at the end of the 1970s. Once again, the world already knew it was exposed. Once again, it kept operating as though exposure could be managed indefinitely. Then the revolution hit. Production was disrupted. Energy tightened. Inflation climbed. Confidence cracked. And restoring stability required extreme policy force. Once again, the lesson was the same. Systems do not collapse because nobody can see the danger. They collapse because the cost of admitting the danger early feels politically inconvenient. That is why the present matters so much, because the pattern is not hiding anymore. The world has built a global order around concentrated energy flows through vulnerable geography. Check. The world has layered debt, complexity, and financial leverage on top of that exposure instead of reducing it. Verified. And now geopolitical pressure is striking the energy artery itself. Undeniable. That is why this moment feels bigger than an ordinary news cycle. Because it is hitting the modern world exactly where its fragility was hidden behind efficiency. For years, the system told itself a comforting story. Naval power would keep sea lanes open. Markets would smooth disruptions. Technology would improve forecasting. Diplomacy would prevent extreme rupture. Strategic reserves would buy enough time. Globalization would make major energy confrontation irrational. But history is full of systems that believed cost would prevent conflict, right up until conflict arrived anyway. That is the illusion collapsing now. And this is the part that matters most. The real question is not whether every worst-case scenario happens immediately. The real question is whether the world can ever again price this corridor as if it were ordinary. It cannot. That is the break. Because once a choke point enters the zone of coercion, everything changes. Tanker operators reprice risk, insurers reprice exposure, investors reprice vulnerability, governments reprice emergency planning, militaries reprice strategic commitments, supply chains reprice continuity. Even if flows resume, something important is gone. The innocence is gone. And once innocence disappears, cost rises. That is how systems change, not always through permanent shutdown, not always through a single cinematic collapse, sometimes simply through lasting fear. And fear inside a critical energy corridor is enough to raise the operating cost of the entire machine. That is why the phrase 4 hours before a massive energy attack matters even beyond the literal countdown. Because the countdown is not the main signal. The main signal is that energy infrastructure has entered the logic of coercion. Once that happens, time compresses. Governments stop thinking in months and start thinking in hours. Markets stop thinking in models and start thinking in scenarios. Shipping stops thinking in efficiency and starts thinking in survivability. A just-in-time world is not built for that. A debt-heavy world is not built for that. A politically divided world is definitely not built for that. And that is why this is not just another regional flare-up. That phrase is too small for what is happening. The real issue is whether the global economy can remain stable while one of its most important energy corridors becomes a pressure point inside a military confrontation. History gives the answer very clearly. Not without repricing, not without inflationary pressure, not without political consequences, not without a harder strategic order emerging on the other side. And you can already see the logic of that process. The first effect appears in markets. Oil moves, shipping costs rise, risk premiums expand. But that is only the beginning. The deeper problem starts when energy stops being a chart and becomes a chain reaction. Transportation costs rise, input costs rise, food pressure rises, industrial margins tighten, consumers feel it. Governments respond, narratives break, anger spreads. That is the moment when an energy crisis becomes a political crisis. Because ordinary people do not experience systemic repricing as an abstract concept. They experience more expensive fuel, more expensive food, more fragile jobs, more pressure on daily life, and the growing sense that the people in charge do not actually control the system they claim to manage. That is when trust begins to erode. And once trust erodes during an inflationary shock, the damage spreads far beyond economics. It reaches politics, social stability, institutional legitimacy, foreign policy, even domestic identity. Because when people feel pressure they cannot escape, they start questioning everything that was sold to them as stable. So the deeper question is not just what happens next. It is why this keeps happening. Why do modern systems repeatedly build themselves around fragility? Because efficiency is seductive. Because long periods of calm teach the wrong lesson. Because when supply chains work, nobody wants to pay for resilience. Because governments prefer short-term growth over long-term security. Because markets consistently underprice structural risk until the structure starts burning. Because elites keep confusing uninterrupted flow with guaranteed flow. That is the hidden law underneath this entire story. The machine looks strongest right before its assumptions are exposed. And when those assumptions finally break into public view, people are told the crisis was unpredictable. It was not unpredictable, it was merely inconvenient to acknowledge in advance. This is also why "this time is different" is such a dangerous phrase. It flatters societies at exactly the moment when they should be most careful. People say modern finance is more advanced. They say logistics software is smarter. They say strategic reserves are larger. They say markets are deeper. They say central banks are more experienced. They say technology will adapt fast enough. Maybe. But none of that changes the physical truth. Industrial civilization still depends on real energy moving through real geography exposed to real force. Algorithms do not escort tankers. Optimism does not reopen a threatened strait. Financial engineering does not eliminate choke points. And complexity does not remove contagion. It multiplies contagion. That is why advanced systems can still suffer primitive shocks. In some ways, they suffer them even worse because the more tightly linked the system becomes, the faster the stress travels. So what happens next? Not prophecy in some mystical sense. Structural expectation. Volatility remains elevated because stable pricing depends on stable passage. And stable passage no longer looks guaranteed. Governments intensify security planning and emergency coordination because they understand what is at stake, even when their public tone sounds measured. Import-dependent economies become more defensive because they know a vulnerable corridor can quickly become a national emergency. Investors start separating countries, sectors, and assets that can absorb energy stress from those that cannot. And politics grows harsher because energy shocks reach the public fast. That is the next stage, not necessarily one instant collapse. Something more grinding, more persistent, more corrosive. A drawn-out repricing of the world. A world in which energy security becomes more openly tied to military power. A world in which trade routes are treated less like commercial conveniences and more like contested strategic assets. A world in which fragility becomes more expensive every year. A world in which resilience stops being a slogan and starts becoming a premium. And that leads to the final lesson. Do not watch this story like a spectator watching an explosion. Watch it like an engineer studying a stressed system. Look at the choke point. Look at the leverage. Look at the dependency. Look at what governments rush to protect the moment pressure rises. Because what states protect first tells you what the system truly depends on. And once you see that, the fog begins to clear. You stop asking whether the shock was surprising. You start asking why so much of the world was built on assumptions this fragile. You stop listening to comforting slogans. You start tracking structural exposure. You stop being hypnotized by headlines. You start reading the machine. That is the real revelation here. Iran's threat matters not only because of what may happen over the next few hours or the next few days. It matters because it exposes what the global economy still is beneath all the language of modernization and progress. A vast, interconnected machine resting on physical roots, strategic bottlenecks, and political fault lines that never truly disappeared. The pattern is old. The trigger is current. The vulnerability is systemic. And the consequences, once this process starts, do not stay neatly contained. So do not comfort yourself with the idea that this is just another regional crisis. Do not assume the system can absorb infinite shocks simply because it absorbed previous ones. Do not mistake the absence of collapse for the presence of resilience. The world often looks stable right before it is forced back into reality. And reality, in moments like this, is brutally simple. If too much energy passes through too narrow a corridor and too much debt is built on uninterrupted flow, then any threat to that corridor becomes a threat to the whole pricing system. That is not drama. That is mathematics. And if you want to understand what comes next, then the next question is even bigger than the attack itself. How was this machine built? Why were these vulnerabilities allowed to deepen? Who benefits from dependence? And who survives when the repricing begins? That is the next stage of the story. And that is the stage you need to understand before it arrives.